Good morning. My name is Greg Strachan, private broker at Emperor Asset Management. This morning I have with me Mr. Mark Barnes, the chairman of Purple Group. And as you guys know, Emperor Asset Management is a subsidiary of the Purple Group, a listed company on the Johannesburg Stock Exchange. So hoping today for Mark to share with us his insights on the company as well as the vision for asset management, as well as talk a bit about the market as well. So thank you, Mark, for joining me this morning.
It's great to be here, man.
Thank you very much.
Friday morning, it's the 28th of February.
Excellent.
And we've just got 408 in the cricket.
You certainly have. 162 for De Villiers.
Yeah, fantastic.
Firstly, I think it's really important for our clients to get an understanding of your vision for the Purple Group. Would you mind sharing that with us?
Yeah, I must say, it's been a vision that has sort of built itself up over the last 5 or 6 years. You know, as we've attached pieces together and built on one piece to another, we find ourselves in an extraordinary and unique position where we have a technology-based company that's in the long-term asset management business. There's no one like that. So most asset managers are into long-term research and all of these kinds of things. They don't have any technology. You go and visit there in your pinstripe suit and you've got to have a lot of money before you get there. We're online, we're social media, we today. The whole of Global Trader was built on the platforms which are probably the best retail trading platforms in South Africa. And so if you take that and you sort of overlay asset management, the wisdom of quantitative analysis and momentum trading and all of these kinds of things become a possibility, become an objective possibility. And because of that technology and because of the experience that we've built up over the last 10, 15 years, we can offer at any entry level, at any level of wealth, participation in the investment and trading markets of South Africa. And so we start talking about that as quite a broad strategy. The broad, it sort of goes from novice to high frequency trader on the one axis, and it goes from immediate trading, watch the screen, to planning for your retirement on the other axis. And we've got different parts of the group which handle those different quadrants.
Excellent. So, what I'm getting from that is Emperor Asset Management is a key cog in the Emperor, in the Purple vision. How do you see the future of asset management playing out in South Africa? Because it's gone through a huge metamorphosis and there's a lot of change going on. So what's your view on how that industry, especially the asset management side, is changing, and where do you see it going?
Well, it's changing because the people who are participating in it are changing, and their desires and their requirements are different. There are a lot of things that affect it. First of all is longevity. People are going to live a lot longer than they plan to live. So saving and the compounding effect of proper saving is going to be a material outcome for you when you turn 60 or whenever it is that you start thinking about the next 30 years that you're going to be alive. Okay. People therefore have to start thinking about this aspect of their lives a lot younger. And if you're only going to work for 40 years and you're going to live for 40 years after that, that sum doesn't balance. So it's become a lot more intense, a lot earlier, and we have set ourselves the task of making it a lot simpler. There are only some 250,000 people in South Africa out of a population of 52 million that are actually invested in the stock market. And there is, and this is irrefutable across the world, there is no better asset class to plan for your retirement than equities. It's just, things go up and down. Our market's been a bit steamy. I think we've done over 10% in the last 30 days. Don't believe that, but it's going to retrace a bit and it's going to then steadily climb. It is the best performing asset class always, forever. And so we just want to make that more accessible. We want to move away from stuffy cigar-filled whiskey discussions in stockbrokers' rooms and dinners to what do you want, how do we tailor it for you, and what can you afford now, because that's very different to what you might be able to afford later. So we're also saying, how do you get access to a portfolio with a limited sum of recurring money that you otherwise might have started saving in a bank at some ridiculously low after-tax yield?
And that's actually, a lot of our clients would agree with you, and they've experienced Emperor Asset Management and the difference it offers to a lot of other products that they're currently involved with. So completely concur with you.
People graduate to various parts of our business. So you might start off as a small easy equities client. We can talk a bit about that now. Then you might graduate into a sort of medium-sized client with Emperor Asset Management. Then once you've got a portfolio up running, you might start wanting to trade and hedge around that with GT247. And if you become a high-touch client that needs a lot of attention with beginning to have a reasonable NAV, you can get into GT private broking. And so the parts of the group kind of complement one another.
Yes, for sure.
And we, sitting in the middle here, our Purple Group, is the circle that binds that all together and makes sure that the client gets the best parts of all of our group and that we're all on top of it. Yeah.
What to do now is get more specific onto the client's equity portfolio, obviously, that they've got with Emperor. How do you see what we've just been speaking about playing out in our local equity market, especially in relation to the fact that, and a lot of people don't realize this, that our local JSE is pretty much 65% offshore revenue base. So how do you see this playing out in our local market over the next sort of 18 months to 2 years?
Well, there are two big forces that are keeping our market and will keep it buoyant. The first one is the one that you pointed out, is that South Africans, funnily enough, are diversifying their risk outside of South Africa by buying companies like Naspers, Billiton, SA Breweries,
Aspen,
for whom 80 or more % of their earnings are from offshore. So, I mean, even companies like Anglo American and so on, there's a lot of offshore exposure. So, that's the first thing that will keep feeding the market. So, is this buying of rand hedges. And in a funny way, if the purpose for buying a rand hedge goes away, then there's all of the other local stuff to invest in. So there's a bit of a feeding frenzy, I would almost argue, going on there. The other thing which is affecting all equity markets is cheap money. This quantitative easing, which I'm not a great fan of, quite frankly, but it's essentially what it's done is it lowered the cost of money to practically zero, but it's also lowered the returns on money to practically zero. So if you're in search of yield, you have to go, and if you're in search of a composite return, you have to go into the equities market, and you have to go into South Africa. We've got bonds that are yielding, I forget now, 8%, 7%. If you're sitting in Europe with your euros earning minus 0.5% in Denmark, then you kind of can see a risk-return profile that pays off. So two forces at work: cheap money washing around the world, looking for a place to go. Us looking at rand hedges as we're increasing the export. Our companies rather than their products, which I would rather it was they were exporting their products. And those sort of things are quite bullish signals for the medium term in South Africa. I would like to see and hope to see more direct foreign investment coming into building things here which then export their products. So I don't like the fact that we export wood to China and buy back chairs from them. So I think in due course we'll see more beneficiation and all that. But for the moment, there's a lot to hold up equities. And I think, of course, there are going to be periods where that corrects. It's a long-term game.
Yes, and I'm glad you brought up that, because that was actually my next question, is talking about the fact that since the financial crisis, the two main things have been low interest rates, quantitative easing, that have given equities a huge boost. And as you say, people searching for yield have got no other choice. And it looks as if every time there's sort of signs that they might increase rates, then something happens that they keep it lower, and it certainly seems that way going forward. So I've always said to people, equity prices will continue to rise as long as there are those in place, because if central bank policy is doing that, until they change policy completely, we're going to see equity prices continue, and then we're going to see volatility based upon news flow that we get from geopolitical threats, etc., etc. Do you agree with that sort of view?
Well, you're kind of forced to put your money into equities. If you had your money sitting in a savings account earning a negative real return, then it's essentially depreciating. Okay, so even in South Africa, we've got a relatively low inflation rate, 4-5%. But if you're putting money in the bank at 5% on call, and after tax that's 3%, you've got a negative capital coefficient in your cash. Okay, so you can't do that. You have to buy an appreciating asset. Now, properties are a nice yielding asset. It should be part of everyone's portfolio. There should be elements of bonds in your portfolio because there's a nice running yield in those things. But for the capital growth, primarily, the capital growth that's going to outstrip the other asset classes is equities. This is not rocket science. This is just how it is. Okay, it happens year in, year out, forever, with, obviously the movements in that. So, and funnily enough, the geopolitical risk in South Africa has been what's partly supported the rand hedges, so everyone gets a bit worried and they start buying breweries or Naspers, which is, Naspers is a 10-cent game in China,
Exactly.
And so
it's 12% of our market almost.
Yeah, we call Naspers the big mama here, because when she wakes up in China and she's up, the market's up, and when she's down, it's down. Yeah.
Excellent. Well, thank you so much, Mark, for your time, and I hope you guys found that very informative. And as you can say, we left off on quite a positive note there, that there's still a view that we're going to see higher equity prices. Obviously, there's going to be volatility. It's the same as what has happened over the last few years. We're going to see some volatility, but there's a lot of positivity out there with regards to equity returns. And from an Emperor standpoint, we've had a fantastic start to the year, and we see that continuing. And we've got faith in our quantitative model, and we continue to see higher growth over the next few years. So thank you so much, Mark, and please look forward to another interview soon. Thank you very much, guys. Cheers.